Hi, I'm Peter Williams, founder and CEO of ACE Portal, the hub for private placements. The next series we're looking at is basically the investors or investor qualifications that are required to invest in private securities. So in general, to be able to participate in the $1.2 trillion annual private placement market, you need to be one of three investor classes for the most part: a qualified institutional buyer, a qualified purchaser, or accredited investor. The accredited investor is really the one that's getting the most press these days related to the Jobs Act, which is hoping to open up the market to more investors and help small businesses raise capital more easily. But we'll run through all of these. Qualified institutional buyer is an institution that has over $100 million in investable assets. Qualified purchaser can be an individual or an institution that has $5 million investable, or a manager that oversees $25 million of investable assets from other qualified purchasers. An accredited investor, primarily we think about individuals here. The qualification is you need to have made $200,000 a year for each of the last 2 years and have a reasonable expectation that you'll make that in this year as well. Or if you have $1 million net worth, and that $1 million net worth has to exclude the equity value of your primary residence. You can also be an institutional accredited investor if you have $5 million of investable assets. So, these rules are in place for a reason. The idea is the Securities and Exchange Commission is trying to protect investors, and the idea being they want to limit private investments or investments in private companies to individuals or firms that either have enough financial sophistication to take the risk associated with not necessarily having access to all the financial information that you would get investing in a public company, or also that you have the financial wherewithal to basically take some losses, given that some of these investments are higher risk in certain circumstances than what you get in the public markets. And so that's why they have these qualifications in place. With the Jobs Act, the SEC is also looking at ways to implement this crowdfunding concept. And the way it's currently written and to be implemented is basically it will relate to transactions that raise less than $1 million in a year, so smaller transactions overall, and then the maximum investment that any investor can make, and then again they don't need to be qualified as any of these three individuals or parties up above, is limited based on their income or their net worth. So if you make less than $100,000 a year, the maximum investment you can make would be the greater of $2,000 or 5% of your annual income or your net worth. If you make greater than $100,000 a year, it would be capped at 10% of your net income or your net worth, and that would be capped at $100,000 in any investment. So overall, these are the individuals that could play in the private placement market, both as is and sort of contemplated. At ACE, we view, again, the placement agents as being kind of important in the process, and we focus on transactions that are all posted by placement agents. So we're marketing to the existing universe that sort of constitutes the $1.2 trillion market, primarily focused on institutions, but also now giving placement agents the ability to open up these private investment opportunities to a much larger universe, including up to the 10 million accredited investors that exist within the United States. Thank you.